George, we're talking ARM Holdings. This stock's had a great run so far this year, up nearly 65%. Came out with some positive comments over the weekend. Their CEO did. But what's your take here on ARM Holdings?
Well, I mean, obviously the stock has performed exceptionally well year to date. I mean, if you look at it from a publicly traded standpoint, we don't have too much information considering they became publicly traded back in September of last year. But nonetheless, when you think about, ARM Technologies, this is a company that's essentially well integrated across multiple mobile applications and everything that has to do with data center integration, also industrial and IoT-based technology. So when you think about CPU and graphics or GPU integration across mobile applications, ARM Holdings and other companies like Qualcomm, which have actually performed quite well this year, as well as Intel and Samsung, which are other fringe players in this space. But I think if you consider artificial intelligence and integration of AI alongside ARM's licensing technology, this is a company that's well positioned for growth in artificial intelligence, especially when it comes to their technologies associated with high performance and low energy utilization. And that's a key component to mobile interface, because you're essentially not plugged in like you are with CPUs and computers or GPUs or even data centers. So energy efficiencies that is counterbalanced with computational power, and that's where essentially their technologies are really well versed globally. They don't earn too much on a per device basis, but they have about 250 billion various devices across their time frame. They earn about 9 cents per licensed device on an annualized basis. But overall, this is a company that's very well positioned, like I said, to grow based upon the demands for artificial intelligence.
George, for our listeners trying to get a handle on what ARM does, it's really energy efficiency, isn't it? That's their niche in this market. And as the needs for AI and energy expand and people expand more energy, their ability to make it more efficient makes them a major player going forward. Now, the valuations are kind of crazy, and we're just getting to learn more about this company. But if you think energy efficiency, you get a lot better idea of what they provide, right?
Yeah, absolutely. I mean, that's the key, especially when it comes to mobile computing, is you have to weigh the computational power. We know that there's a lot of power out there in terms of processing power, but from a mobile standpoint, it has to be efficient. And that's where ARM and even companies like Qualcomm really are well suited, especially with the demands for artificial intelligence, which demand both CPU power as well as graphics power. So I think that's why we're seeing Qualcomm actually perform quite well this last year. I think we're moving into the adoption of artificial intelligence in the mobile interface, which will create a demand for not only updates in mobile devices, but again, the integration of their software across multiple platforms, but across multiple distributors as well, including Intel and Samsung. But there is a catch here for ARM, and the question is valuation, and as you brought up, Kevin, because if you look at 2025's earnings right now at around $1.56, it's trading around 78 times that year's earnings, which is quite expensive. And even from a price to sales standpoint, I mean, the company's market cap right now is around 130 billion. Last year for 2023, they generated around $3.3 billion in sales. So it's trading around 30 times, price to sales, and that may be considered rich, especially on the valuation from an earnings standpoint. But one of the things I did notice about the stock is from a technical standpoint, it is trading above its 50-day moving average, so that's trend positive. And at the same time, I went back a couple of quarters and looked at the short interest where it was over 10%. And right now it's below 1%, shares shorted as a percent of the float. So I'm not saying that that's something meaningful to consider for buying, but it seems to me that those who have shorted the stock or were short have been covering in the last couple of quarters.
All right, great backdrop for us. Thanks to George Tsilis, Senior Markets Correspondent here at ARM Holdings. Kevin.